Hello, we want to welcome you to today's program, Protecting Your Assets in Student Loan Management. Today's program will run from 12 p.m. to 1 p.m. During the live webinar, participants are welcome to post questions using the Q&A tab in the Zoom portal. A PDF of the course materials is available in your learning dashboard. Instructions on how to access your learning dashboard are available in the greetings email you received earlier today. At this time, I'd like to hand it over to Mike Mooney from USI and Jonathan Harold from SoFi. If you guys want to just give a brief introduction, and then we can move into the PowerPoint.
Thanks, Sierra. I appreciate everybody dialing in today. Hopefully, part of your lunch consists of some caffeine, so myself and Jonathan don't put you to sleep as it relates to insurance. But we will go through some important topics. But by way of introduction, my name is Mike Mooney. I'm Senior Vice President and Professional Liability and Consumer Practice Leader for USI. And most importantly, I'm the liaison between USI and New York State Bar. I've been with USI and working exclusively with the New York State Bar for 13 years. Jonathan, if you want to just do a quick intro and then we can kick it off.
Yeah, thanks, Mike. And hello, everyone. Thank you for having me. My name is John Harold. I lead the partnership success team for SoFi. And Mike will get into his presentation on insurance, and then we'll follow that up with some details around the student loan landscape and some benefits that are available to NYSBA members. So, Mike, I'll pass it over to you, and we'll pick it up after you're done.
Great. So today we're going to go through a couple things. I want to just kind of explain USI and our history with NYSBA and why that's important. And talk a little bit about insurance, right? Because think about it, insurance isn't sexy, right? I made my living in insurance. I didn't go to school for insurance. I went to school for finance and ended up in insurance. And that's usually the story for everybody, right? It's not a sexy industry, but it is. Insurance is it's your financial plan safety net, right? I remember having a professor in college tell me this is how you should look at insurance and assets. When you're younger and you're starting your career, you should have as much insurance as possible because your assets are down here. But as your assets grow, you should lower your insurance to be commensurate with the risk, right? So that's how you need to look at it in insurance. It's kind of a safety net to protect your assets. And it's not just, paying off student debt or paying off mortgages. It's income replacement. If you are to pass away, how is your significant other still able to maintain the lifestyle? So we'll talk about that a little bit. Talk a little bit about lawyers' professional liability, cyber liability, life and disability, some personal products, and then I'm going to kick it over to Jonathan to talk about what I think is really important here is, the student loan finance, refinancing options that are available to NYSBA members that are really different and better than anything you can get off the street. And we know that, most young lawyers are saddled with a lot of student debt, and Jonathan's going to talk about ways to kind of help you with that. So a little bit about USI. I'm not going to read all this, but USI, we're headquartered in Valhalla, New York, and Westchester. We've been working with the New York State Bar for well over 50 years. The group that I run at Affinity, what we do is primarily work with associations, most notably bar associations. New York State Bar is our largest client. We work with multiple other bar associations as well. We're the fourth largest privately held broker in the United States. We're owned by KKR and CDPQ, which are two private equity companies. We have roughly 10,000 employees. We have roughly closing in on $3 billion of revenue and about 150 years of experience. And the reason that that's important that I want to share, and all the accolades on the side, I'm sure you can read, but what makes us different and unique is we specialize in insurance for lawyers, just like you specialize in a certain area of practice, right? And that's the way you should look at insurance, right? Because if you're practicing family law and I'm going to get divorced, I'm going to go to you to represent me. But if I slip and fall in Manhattan one day, I'm not going to go to a family law attorney. I'm going to go to a personal injury attorney, right? And that's normal. You should think about the same thing with insurance, right? All insurance people aren't the same, just like all lawyers aren't the same. So that's what makes us inherently different, is we just specialize in insurance for lawyers. That's what we do. That's, you know, what our primary business is to lawyers. So that's what makes us significantly different. But want to talk a little bit about some insurances just to give you enough information to be dangerous. You know, some of these coverages, you're either not at the point yet in your career where you're the decision maker in these coverages, but just to, you know, just to give you enough information of kind of what you should be thinking about, or what you should look for in these type of policies going forward. So we're going to cover, you know, what to look for in professional liability, you know, what to look for in cyber liability, and things like that. So lawyers' professional liability, right? That is, you know, if you're in a firm practice, behind your salaries and employee benefits and rent, this is likely your third or fourth biggest expenditure. It's also something that's going to protect your billable hours and protect your reputation, right? So you need to think about lawyers' professional not as a commodity. You need to look for it in a way that it's the most robust coverage, right? Because legal malpractice, you build your practice on reputation, right? Unless you're personal injury where you advertise. But for the most part, lawyers and firms build their books of business and their clientele based on referrals and things like that. But you want to make sure you have a policy that's going to cover everything you need, protect your reputation, and protect things like that. A couple of unique highlights about our policy. We do have what I believe to be the strongest policy, not just in New York, but in the nation. We offer a 5% bar discount. So if you're a member of the Bar Association, you get 5% discount. And also, we, through the law practice management, Sierra and her group, we do different loss control seminars throughout the year, and you can get an additional 7.5%. Last year in total, USI gave roughly $1.9 million back to our policyholders, to NYSBA members, in ways of discounts, right? So that's huge. That, you know, we have a lot of members who, by enrolling in our programs and having the lawyer's professional doing the risk management, actually ends up paying for their dues for the association, right? So that's great. From a coverage perspective, you know, we have a broad definition of legal services, not that many exclusions. Policy was written by USI, particularly for New York attorneys. You know, one of the big things we did during COVID, which wasn't huge to NYSBA members, is we changed our policy to add virtual notary, right? That wasn't something that anybody contemplated before COVID. And we were able to do that because we knew that was important to the NYSBA members. And a lot of our competitors couldn't do that. So again, legal malpractice, really, you know, I'm not going to spend a whole lot of time on it, but it is one of the most important coverages, and really want to work with a specialized broker who does this. Not just USI, there's some very good specialized brokers. But if you do look for legal malpractice, make sure that broker actually works with other lawyers as well, and you're not their only client. Next, just briefly want to talk about cyber liability. I know that's a really big hot button thing now in every walk of life, you know, cyber extortion and hacking and anything like that. It used to just be, you know, years ago, it was like, oh, Target. Now you turn around and everybody's been hit, right? And law firms are a huge target for cyber exposure for a lot of reasons. One, you know, with all due respect to lawyers, we're not considered the most tech savvy group. And then if you add in, you know, the plethora of personal identifiable information that you have, from bank accounts to social security numbers to, you know, mergers and acquisitions information, you have a lot of information. So if you add those two things in, you are a huge target for these thieves. And one other thing, New York actually 3 years ago enacted what's called the New York Shield Act, where certain businesses, depending on their threshold of revenue, have to adhere to certain mandates relative to cybersecurity insurance and things like that. If you ever want anything on that, you can contact USI. We did a whole risk management one-pager on the Shield Act and explaining what it is and what you have to do. But really, cyber is something that's out there. It's a huge exposure. If you do get into, if you do have a practice or you're going to set up a practice, it's something that you want to look at. Even if you don't buy cyber insurance, if you go through the process, the application process, we'll be able to tell you where you have some vulnerabilities, right? It's almost like going to get life insurance, which I'll talk about in a second, where you get a physical and, hey, you find out your cholesterol's high. Doesn't mean you still have to buy the life insurance, but you're certainly going to fix your cholesterol, right? So if you go through the process on cyber, you may not buy a cyber policy, but we may tell you, hey, you need to do this, this, and this to protect your firewall, or you need to get multi-factor authentication, stuff like that. So just going through the application process for cyber insurance, that in itself is a risk management activity that could be very good for your practice. So let's talk about kind of personal insurances now. I know cyber and lawyers professional, if you're in a large firm setting, you may not be at a point where you're a decision maker on that, right? So, but the next couple policies, and then what Jonathan's going to get into, is something that you can certainly take advantage of now. Through our relationship with NYSBA and New York Life, we have two very big insurance programs, one for life insurance and then one for disability. And they're group master policies. Sometimes we're able to do what's called guaranteed issue, where there's certain times during the year that will provide members and new members a guaranteed issue amount of life insurance. And what guaranteed issue means, you don't have to go through underwriting. Underwriting for life insurance is, could go from just doing a physical to having to do blood work, and it just depends on the amount of insurance that you're getting and what you're doing. But from a life insurance perspective, people don't want to necessarily think about life insurance because then you have to think about your own mortality. But unlike professional liability, where one could argue you're a better risk as you've been in practice longer, life insurance is the total opposite. You'll never be more healthy than you are right now. So we always tell people you should buy life insurance young because it's cheaper, right? But you got to think about that. And life insurance isn't the traditional, how much do you have in, I think I was saying earlier, how much you have in student debt, and, what's your mortgage, and how many kids do you have, and do you want to send them to college? That's all well and good. But once you pay all that off, if you die young, you likely have a spouse or significant other who is going to continue to live on, and how are they going to maintain that lifestyle? So you almost want to think of life insurance too as income replacement. And what we always say roughly is, I know this is a huge number, but you just got to go with me. We always tell people to get 20 times their salary. And the reason we say that is, say you make $100,000, 20 times your salary is roughly $2 million. You can add, if you take the proceeds, God forbid if you're to pass away, if your spouse or significant other takes the proceeds of that $2 million and puts it in a interest-bearing account, say roughly you get interest of about 5%. That $2 million will kick off about $100,000 a year in just interest. That alone replaces your salary to your significant other without even having to draw down on the principal. Now, again, maybe that's too much. Maybe you would say, hey, listen, my spouse would work, but that's just a good thing to think through. And what we see with a lot of young attorneys too is what they say to us is, listen, Mike, this is all well and good, but I started at a law firm and they gave me life insurance that's 1 or 2 times my salary, that's fantastic. That's awesome. That's a great perk for being an employee. One thing that is missing in that is that insurance is what's called, it's not portable. So what that means is if you leave that firm, you no longer have that insurance because you're now with a different firm. So buying it separately is portable. So if you're with the Mike Mooney firm or the Sierra firm or the Jonathan firm, that insurance follows you to each place that you're at, right? So thinking of having a standalone life insurance policy is something that you should significantly think about, because again, it's going to protect your family, it's going to protect your income, and then again, from a portability standpoint, having it outside of work. Now you can keep the work one as well, right? But having a separate one, because like I said, say for instance, you're with a firm for, you start at 27 and then you're there for 10 years and you only keep their life insurance, then you're 37 and you're going out to buy life insurance. Now you're 10 years older and you're likely going to pay more, right? So again, the key takeaway with the life insurance is, the portability issue with your current, if you have it through your employer, and two, you're going to never be more healthy than you are right now. So that's something that you should really look into. Disability. Disability is difficult, right? A lot of lawyers I talk to say, hey, listen, I don't need disability. Just give me an iPhone, a laptop, and I can work, right? But what if you're a litigator? What if you go to court? What if disability isn't just, physical disabilities. It could be mental disabilities, right? And there's a lot of, mental issues that could come around. And what if you're not able to practice law anymore? What are you going to do? If you think about it, it's almost more important to have disability than life insurance because of this. Death happens normally when you're past your income earning years, right? Most times. Obviously, people die prematurely, but for the most part, people die after their years of income. Where conversely, disability is likely a greater threat during your income producing years, right? So you just need to think about that as well. And we do have group policies that address this. And the life and the disability are both group policies put together specifically for NYSBA through USI. They have coverages that are not available for the regular public, at pricing that's not available for the regular public. This is why having a group gives you kind of buying power. So that's kind of the important thing again. But the takeaways from the life and disability, life, you'll never be more healthy than you are, and disability is more likely to happen during your working career than death is. So you need to think about that too. And also, disability isn't, hey, I need my knee replaced, I'm on disability. It could be much broader than that. And then also, we also provide other coverages, right? All your personal coverages, your home and auto, or your renter's insurance, travel insurance. That's a huge thing now, right? People before COVID, they never insured their trips. We have a huge insurance, travel insurance that could provide you coverage if you do book a trip and you need to cancel for any reason. We do have pet insurance, right? Through the bar association. I know people. I buy it. I have 2 cats. I buy my pet insurance. People love their animals and buy pet insurance. Also, long-term care. We have dental and vision, and we have business owners and overhead coverage as well. So basically, in a nutshell, anything that you can think of that you need from your personal to your business. In your business setting, your professional liability or your employee benefits or your general liability, we have a solution for that. And then on the personal side, for you and your significant others, we can do the home and auto, the renters, the condo, the travel, the pet, the dental, the vision, everything like that. And they're all unique coverages specifically for NYSBA members that aren't available on the street. So again, insurance, and I'm gonna pass it over to Jonathan in a second. Insurance, again, it's not sexy. It's something that nobody wants to think about. It's not tangible. You can't touch it and feel it. Likely when you use insurance, something bad happened. But again, it is a safety net to protect your assets, and particularly when it's young lawyers. From an HR perspective, we're never allowed to call anybody young. It's newer to the profession, right? So newer to the profession people, you want to protect that assets, because you're starting to grow it, right? So you need to think through from an insurance perspective as it's part of a solid financial plan, not just kind of throwaway money. So with that, I want to pass this over to Jonathan to talk about really what the main attraction here is. I was the opening act, and Jonathan's kind of the closer here, about student debt consolidation, right? Lawyers and doctors are saddled with, a lot of debt. And a lot of times from the people that I talk to, they just go, man, it is what it is. That's what I signed up for. And I just got to let it ride. And Jonathan will talk to you. No, you don't have to look at it that way. There's other things. And I know with some changes in legislation, things have changed. So, and Jonathan's from SoFi. SoFi is actually a real company. It's not just where the Rams play football. They're actually a huge company. If you watched the Super Bowl last year, they had a lot of ads. So we've been partnering with SoFi for many years, and they're a great partner. So with that, Jonathan, I will turn it over to you, and let's tell these NYSBA members what they can do around student debt.
Awesome. Thank you, Mike. If there's one key takeaway from your presentation, I am underinsured and may need to hit you up after this. So nicely done. And thank you for the transition. I'm just going to switch over to my PDF so you don't have to guide the slides and go full screen. Amazing. So as Mike was alluding to with student debt, there's been a lot of changes in the past 3.5 years, most recently with the Supreme Court decision around forgiveness getting turned down. We have payments restarting in almost a month. There are a ton of different considerations if you have student debt. So we're going to cover all that today. This presentation will last around 20 minutes, and we'll start with the latest news on student loan repayment and forgiveness, go into the different types of student loans and repayment plans available to you, discuss how to choose a path forward based on the different scenarios that you may be in. And then lastly, how SoFi at Work can help NYSBA members. We have a great limited time promotion going on right now, so I'll make sure to touch on that at the end. Following the presentation, we will do Q&A. So if you do have questions, please type them into the questions box or chat box, and I'll make sure to get them to them at the end, as well as Mike to questions related to insurance. Diving into the latest update on student loans. So if we take a step back, many of you may know that payments on federal student loans have been paused since March 2020. So if we go back 3.5 years, time machine back, that was when the CARES Act was passed. Remember, COVID was spreading across the United States. People were losing their jobs because businesses were closing. And so Congress had to act very quickly. And they passed the CARES Act, which was this multi-trillion-dollar stimulus, and included in that was an important provision for student loan borrowers, where it said, if you have a federal student loan, which account for about 92% of all student debt, there's federal and there's a little bit of private. If you have a federal student loan, we are completely waiving your payment and putting your interest rate to 0%. And the reason why they did that is because if you lose your job, student debt shouldn't be at the priority of what you should focus on repaying. You maybe a family to support, basically just a life. So they completely waive payments and set interest rates to 0, providing that immediate relief. It was set to expire in 2020, and because COVID didn't go away, it got extended, and then it got extended again, and it got extended again, and then COVID ended, and then the Biden's forgiveness plan came out, and that got blocked. So it kept getting extended. The most recent update, so going back to the forgiveness plan, if we go to August of last year, Biden came out with his most progressive student debt relief plan yet, where he said that he was going to forgive $10,000 per borrower or $20,000 if you were a Pell Grant recipient. The caveat is you had to make less than $125,000 to be eligible, or $250,000 if you're a married couple. So it wasn't for everyone. It was really targeted basis for people who need it the most from a salary perspective. It was pretty controversial because it wasn't cheap to the government. It was about $400 billion to do this widespread forgiveness, and that's not even for everyone, especially in light of inflation last year, which was still pretty high, and all the other stimulus that the government was passing. Because it was controversial, some lawsuits came out basically saying that Biden Biden did not have authority to enact widespread forgiveness through executive action without congressional approval. And because Congress isn't fully Democratic on the Democrat side, that's why he couldn't get it passed by Congress. So those lawsuits came out, blocked forgiveness, and then it went to the Supreme Court. They heard arguments in February and then came out their decision on June 30th, ruling against Biden's forgiveness. So this came as a gut punch to a lot of borrowers, especially those who had been expecting it since Biden was campaigning. And immediately after, basically the day, Biden came out with his plan B, where he announced 3 actions. Number 1, he's not going to give up on forgiveness. He's going to aim to open an alternative path under the Higher Education Act. So still won't require congressional approval. It's under a different act. The reason why he didn't go with this act at first is because it's going to take longer. It's not going to take months, could take quarters or years. And like the last way he did it, it's not guaranteed that it's going to happen. Number 2 is announcing the saving on a valuable education plan in implemented phases. If you're familiar with income-driven repayment plans, so your standard repayment for student loans, think of it like as a mortgage. If it's 10 years, you're paying the principal and interest till that last month. With an income-driven repayment plan, the goal is to lower your monthly payment to allow you to afford those. So if your loan balance is equally relative to what you're earning, or maybe even higher, going into an income-driven repayment plan can be advantageous because you're lowering your monthly payment. The caveat is it does extend your term from 10 to 20 to 25 years. So long-term, you may be paying more money because you're doubling the time that you're repaying your student loan. So with undergrad payments in the past, income-driven was at 10% of your discretionary income. That's going down to 5%. And then graduate payments is staying at 10% of your discretionary. And then they also have, if your federal loan balance is less than $12,000, they will be forgiving your payments after 10 years. So probably a lot of the people on this webinar, if you do have student loans, it's not as low as $12,000, maybe more in the 6-figure range, just given that you go to law school and get more student loans to pay for all of that. But that is a part of it. Last but not least is the on-ramp period to repayment. So if the government has anxiety that people are going to either not be able to make payments or not know what loan servicer to make their payments to. So they're creating a 1-year on-ramp period where if you miss a payment, they're not reporting you to the credit bureau agency, and they are not sending you to collections. The caveat is interest will still accrue. So if you have a 6-figure loan balance, interest will accrue for 12 months. That interest will get added to your principal, called capitalization, and your loan balance will be higher than what it was previously. So really only as like a last resort for borrowers. And if you are pursuing public service loan forgiveness, the missed payments will not count towards forgiveness in either public service loan forgiveness or income-driven repayment plans. So that was a lot to digest at once. I swear there's less talking points on this slide, but as federal student loan relief is ending, what is next? So starting in, what is today, August 29th, in 3 days, interest will start accruing on federal student loans. So after the over 3.5-year pause, interest will begin accruing, and then payments will begin in October. And that payment should be aligned with what your payment date was before. So not everyone is October 1st. It could be throughout the month. I'll talk a little bit on these future slides on how to know where your loan is if you have a federal loan. Some key things to know as you prepare for repayment. Number 1, your loan servicer may have changed in the last 3 years. The CFPB came out with a report that 4 out of 10 borrowers have a new loan servicer since the CARES Act was passed. And the reason being, there are tens of different loan servicers out there, and a few of them have just said, we cannot keep operating in this business we want to pull out. So they have transferred their loans. So if you had a loan, let's say with Great Lakes doesn't want to be in it anymore. They've transferred your loans to a new loan servicer, for example, Mohila, and that could be your new loan servicer now. So people have to create a new login and set up auto pay to make sure that they don't miss a payment. Deferred payments will not help or hurt your credit score. However, your account will continue to age, which builds credit and may improve scores. The temporary on-ramp period for the next year, I touched on this, but missed partial or late payments will not have negative credit reporting, defaults, or go to collections. They will accrue interest and not count towards income-driven repayment plans, which again, stretch it out to 20 to 25 years. And then public service loan forgiveness has been adding up. Each month worked during the deferral period still counts towards forgiveness, as you need 120 on-time payments. Moving into the different key terms to understand. So when it comes to loans, some key terms are fixed versus variable loans. Fixed meaning it will maintain the same interest rate for the duration of the loan. A majority of federal student loans have fixed interest rates. And even if you refinance to a private student loan, most people select a fixed rate because it does give you peace of mind that you're going to have that rate over the duration of your loan. Over the past 18 months, the Federal Reserve has increased rates almost 10 times. And whenever they increase rates, lenders will increase their rates as well because their cost of funding goes up. So if you have a variable rate right now, you're likely paying a much higher rate than you were before and may want to consider refinancing to a fixed rate. And the variable rate does fluctuate depending, again, how interest rates do in the economy. Subsidized versus unsubsidized loans. When you go to school and take out a federal loan, it's possible to qualify for a subsidized loan, and that is based on a financial need of your family, where the government will pay the interest while your loan is in deferment or while in school. On the flip side, with unsubsidized loans, that is when the day that you go to school and that loan is dispersed, interest will start accruing. And then when you graduate, that interest gets added to your principal balance in an event called capitalization, and that is your new loan balance. So a lot of people are taken aback as they graduate and they're like, this is much more than what I initially borrowed. And the reason being is interest that is accruing during school. And you can see down there, accrued interest, and capitalization is when that unpaid interest gets added. Again, subsidized loans will not experience that fate. If you don't know where your federal student loans are, a great first step is going to studentaid.gov to see which types of federal loans that you have. And if you don't have federal loans, it's likely that you've been making payments on your private student loans. And if you don't know where your private student loans are, a good place to start is your credit report. It should say what lenders that you are working with. As you can see here, so when you take out a loan with the government, you fill out a FAFSA form, you qualify for federal loans, and then when you graduate, it goes to a loan servicer, meaning someone that you repay your student loans with. And there's a number of different loan servicers out there: Advantage, Mohila, Nelnet, Ed Financial. You can see their websites, phone numbers, or even fax if you're into that still. It's who the Department of Education assigns to handle your billing and other services. If you want to go into a different repayment option, such as an income-driven repayment plan or loan consolidation, your loan servicer can help you with those tasks related to your federal student loans. If you have federal student loans, I would hope that your loan servicer has contacted you with payments restarting in October. They're trying to send notices many different ways via text, email, mail, or phone call. And the Department of Education has typically communicated updates via email. Because there are 46 million Americans entering repayment, there are some scamsters out there who are trying to take advantage of people. So be wary of calls from anyone claiming to be a federal agency or asking for your personal information. When it comes to picking your path forward, so there are different options. What Mike was saying earlier, some people have student loans and they feel like they're powerless and there's nothing that they can do. And in the reality there's a lot of different options, whether you want to stay course with your current option, go into an income-driven repayment plan, take advantage of public service loan forgiveness, consolidate your loans, lower your monthly payment by extending your term, or refinance. So These slides are hopefully to help you give a sense of what to do. The first step is understanding what type of student loan that you have. So as I mentioned, 92% of loans are federal, and then 8% are private. Private comes from bank or credit unions, like Wells Fargo does private student loans, Discover, SoFi, Common Bond used to do them. If you refinance with a private lender, it likely becomes a private loan. So knowing which loan falls into either bucket. The next is type of employment. Do you work for a private enterprise or employer, or do you work for the public sector as a lawyer for the government, or for the city or other public entities? So that plays into public service loan forgiveness or not. Affordability. Can you make those payments with your current budget? Or maybe you can barely make them, or maybe not at all. Perhaps you lost your job, you have your rent payment, you're supporting other things, and you just absolutely cannot make your payments. And then last but not least, what is your goal? Do you want to reduce your monthly payment? Do you want to pay less interest or pay off your loan ASAP? For types of employment, as I mentioned, if you work for the public sector, considering public service loan forgiveness, this was put in place by the government at the end of the 2000s era, that first decade, which said that if you have a federal student loan and you work for a government entity or a 501c3 organization, and you make 10 years of consecutive on-time payments, pretty strict eligibility criteria, we will forgive your loans and you will not pay any taxes on any amount that is forgiven. So it's very good, especially since, government jobs tend to pay less than working for a top tier law firm. So going into an income-driven repayment plan, paying for 10 years, and then having your loan forgiven. If that doesn't apply to you, we'll go to the next question. So if you cannot afford your monthly payments at all, considering forbearance, that's when you put your loan payments on pause. You can do that with the government. You can do that with private lenders. Just know that your interest will still accrue when your loan is in forbearance, unlike the current forbearance that's been going on where interest rates are set to 0%. So pausing those payments to get back on your feet, but just know that you will still accrue interest. Another option is the income-driven repayment plan, which again will lower your monthly payment depending on what your discretionary income is. So that's through the SAVE program that's coming out, 10% of discretionary income if it's an undergraduate loan. 5% if it's an undergraduate loan, and that starts in July 2024, and then 10% of your discretionary income if it is a graduate loan. So it lowers your monthly payment, extends your term to 25 years. Definitely calculate out what those monthly payments would be over 20 to 25 years to see if that would equate more to than just paying it off in 10 years. Consolidation is a good way, if you have federal loans, to just group those loans together into one and take the weighted average interest rate. And then refinancing. So you can lower your monthly payment by refinancing to a longer term, but like the income-driven repayment plan, you're going to be paying more over the life of the loan just because you're extending that term out. If you can't afford your monthly payment, then go to the next question. If your goal is to reduce your monthly payment, then considering an income-driven repayment plan or refinancing. If you want to pay less interest, that is refinancing is bread and butter, taking the original rate and refinancing to a lower rate, saving interest over the duration of the loan. And then last but not least, paying off your loan sooner, where you want to consider excess payments or refinancing, where you can refinance to a 5 or a 7-year term. So you could have multiple loans and have different strategies for each loans, but hopefully this gives you a good sense of what your options are. How SoFi at Work can help. So we have a ton of things available for NYSBA members. First and foremost, if you want to talk to one of our financial planners, you can absolutely do so at no additional cost. They are certified financial planners. They have no ulterior motives. They are completely incentivized based on Net Promoter Score or the satisfaction of their members. And you can schedule an appointment as simple as, hey, these are my student loans. Like, what would you suggest I should do with them? Or it could be, here's my income. I have these student loans. I want to buy a house in 5 years. Like, should I make extra payments to my student loans to pay them down sooner? Or how should I allocate my budget? So you can schedule time with them through the link on the right. We have SoFi Insights, where you can track all of your accounts and spending. Before I worked at SoFi, I used an Excel spreadsheet because I was like, I wonder what my net worth is as a 22-year-old. It was nothing. I did have bank account with Bank of America. I had my investments with Robinhood. I had my 401k with Fidelity. So just putting those all in one place to track what those balances are. It was tedious and manual. SoFi automates that, where you can connect all those accounts in, see your balances in real time, and you can track your spending and set savings or savings targets. SoFi Student Debt Navigator, personalized recommendations on what to do with your debt. So like I did on the last slide, where it's basically like a tool that you walk through that answers those questions of what type of loan do you have, employment, what are your goals, and will provide recommendations based on those inputs. And last but not least, refinancing, where you can lower your rate or monthly payment. So going more into the nitty-gritty of refinancing, the main goal for a lot of people for refinancing is going to be savings, where with SoFi, you can save hundreds, thousands, tens of thousands, depending on your situation, thanks to the flexible term. So you can either do a shorter 5 or 7 year term, right in the middle, 10 years, or an extended term at 15 or 20 years. That savings is going to be dictated based on what your loan balance is and the difference between your original rate and your refi rate. So for example, someone with $20,000 of student loans going from a 6 to a 4% interest rate is going to save, but not save as much as someone with $100,000 of loans going from an 8 to a 4% interest rate. So again, hundreds, thousands, tens of thousands, depending on your situation. There's no fees. So we charge no application fees, origination fees, or even prepayment penalties if you want to pay off your loan ASAP. The experience is very straightforward. You can view your rate within a few minutes and then finish your application within 20. And from a convenience standpoint, this is usually a secondary goal, where you can consolidate and refinance both federal and private loans into one loan, one monthly bill, which if you took out loans all of undergraduate and your graduate school, going to law school, you could have loans with like 4 different servicers. So with SoFi, you can consolidate all those into one, or you can just pick and choose which ones. Let's say you have some federal loans that you want to take advantage of income-driven repayment, or they have already low interest rates right now, leave them as is and just refi the rest. Member benefits. Once you become a SoFi member, you get access to benefits at no additional cost. So career coaching, financial advice, and more. Again, all at no additional cost. And the main benefit that we have for NYSBA members, and this is exclusively to you through our partnership with USI Affinity to NYSBA, is we are running a limited time $500 cash bonus if you apply before December 15th. So it's normally $300. Right now, we increased it to $500. We realize a lot of NYSBA members are going to look at refinancing right now as payments come due, so want to provide that extra incentive, for being a SoFi partner. You just need to start your application. You don't need to completely refinance by December 15th. So if it does interest you, definitely check it out. Going into the pros and cons of refinancing, I've touched on a lot of this already, but some of the advantages of refinancing federal student loans, the interest rate, if you can get a lower interest rate and save over the life of the loan. You can adjust your loan term. If you wanted to go from a 10 to a 20 year, that would lower your monthly payment, or get a single monthly payment where you can combine all of your loans into one. The disadvantages, you do lose the deferment or forbearance options with the current forbearance of the waived payments and 0% interest. That's not available to people who refinance, although that is ending. SoFi does have our own version of, if you do lose your job at no fault of your own, we can pause your payments for up to 12 months. For federal repayment plans, you're no longer eligible. This is probably the most important point, to income-driven repayment plans or public service loan forgiveness. So strongly consider this point if you are looking into refinancing, because once you do, you will no longer be eligible. For loan forgiveness, elimination from federal forgiveness programs, which again, I said in that last point. The application process, very straightforward. So go to sofi.com/NYSBA. You will view your rate by entering in basic information about yourself, your name, your address, where you went to school, how much you're earning, and the amount you'd like to refinance. Based on amount, we will conduct a soft credit pull where we will verify your credit score with the credit bureau, verify that you're a real human being. And then if you meet our underwriting criteria, which a majority of NYSBA members do, we'll show you the different rates that you can refinance to. So we have 5 different terms: 5, 7, 10, 15, or 20-year term, a fixed or a variable rate. If it makes sense, you want to move forward, you just select that, provide some information. You can either upload a loan statement so we can verify your loans, or connect to your loan servicer within the application. So if you have a loan with Nelnet, just enter in your username and password with Nelnet and we'll pull in those loans directly. We'll ask for your pay stubs so we can verify your income. And in some instances, we'll ask for a picture of your ID or passport so we can verify your identity. We will then underwrite your loan and send your loan agreement to review and sign. Once you sign that digitally, we will then pay off your existing loans in full, and you will receive your SoFi loan. So if you set up auto pay with SoFi, we'll automatically give you a 0.25% rate discount for doing so. And at that point, you will receive the $500 cash bonus that is available through a partnership as long as you apply before December 15th. Some frequently asked questions we get. So this is the second to last slide. Make sure to start your application through sofa.com/NYSBA to receive that $500 cash bonus. So many times people email us being like, where's my cash bonus or rate discount? And that's because they did not apply through that partnership link. So cannot reiterate the importance more enough. Who is eligible to refinance? You must be a U.S. citizen, permanent resident, or on an employer-sponsored visa, and must live within the United States. For minimum and maximum amounts, we do have a minimum of $5,000. It may be higher in certain states. Like, for example, California has a minimum of $10,000. And then the maximum amount is the full balance of your qualified education loans. I've seen loans as high as $1 million. So we want to help however we can. Do you require or accept cosigners for student loans? You absolutely can. While adding cosigners is not required, it may help you qualify for a loan or a lower interest rate as you add a spouse or a family member who has maybe some strong credit and or good free cash flow that can be put towards the loan. Last but not least, can you refinance a Parent Plus loan? If you are a parent and took out a loan on behalf of your child, that is likely going to be a Parent Plus loan, which carry interest rates between 6 and 8.5%, which are pretty high. With SoFi, you can refinance that Parent Plus loan in your own name, or if your child has graduated, let's say that they have a good credit score, they're making good money, they can refinance that Parent Plus loan into their own name, which would liberate you from the debt and allow you to focus more on your retirement and savings goals. This is the last slide here, so we'll do Q&A, but if you do have questions after, I've listed our phone number and email to our support team. You can also live chat. Once you start your application, there should be a chat box in the corner. We are available 7 days a week at the hours listed here. Awesome. So that is it. I will pause here. I haven't seen anything in the chat or Q&A, so feel free to either type that in or I see a Q&A.
Jonathan, there was one question. Is this actually a good time to get a variable rate loan as a refi?
Not financial advice, but not right now, just because interest rates have gone up. And we base our interest rates on what the Federal Reserve does. And from the sound of it, the Federal Reserve may keep interest rates high and potentially hike more this year. So if you refinance to a variable rate, there is a risk that it could go up even more. So a lot of people are refinancing to fixed rates right now.
Good.
Okay, let's give like a couple more minutes just in case anyone has questions.
Good.
And you can type them anonymously if you don't want to show your name. So there's no bad questions.
Nope, looks like we have another one. Who should we contact for the insurance info? And is now a guaranteed issue period?
You can contact, I'll give you my email. It's mike.mooney, MOONEY @usi.com.
And
But
then
if
we
you
have
go in New York State Bar Insurance Program page. It's on there, but you can also send me an email and I can get you to the right spot.
We have another one with multiple loans taken out through law school with different rates. How are payments funneled to each loan?
Yeah, it's a good question. So it depends on the loan servicer. Some servicers will group those loans together into one monthly payment. And what you would do is create a login with that loan servicer if you haven't already, and then you can either set up auto pay from your bank account to cover those monthly payments, or if you want to manually submit those payments each month, then you can absolutely do so.
All right, any more questions?
It doesn't seem like it.
All right, then thank you both of you. This will conclude the seminar. And thank you for choosing New York State Bar Association programs.
Thanks, everybody. Have a nice day.
Thank you.
Take care.
Take care.